Okay, recording has been started. Okay, ready? Okay, most of you guys ready? Then I will start on the first one. Okay, let's move on to the trading views. Okay, this one is our Learn and Earn weekly class. Okay, just to introduce you, we will first. Okay, I will just write out. Okay, first one we will go on the market structures first. Okay, market structures. Okay, on the second one, I will talk about the liquidities and also fake outs setups. And the third one will be talking on the trading SOP. Okay, my personal trading SOP. Okay, whether I'm not sure whether I'm saying with you guys or what. I'm just sharing on my own trading SOP. Okay, we'll go through these three topics first for today. I think it's just maybe 1.5 hours. Okay, so if time allow me to share more, then I'll share more. But I will make sure I'll complete these three topics for today. Okay, so first one, we go through the market structures here. Let me write out first. Okay, market structures. Okay, so if we talk about market structures, we have to identify the different kind of structures. We got two structures actually. We got two structures which is it's quite okay, which is the swing structures. Okay, first one is the swing structures, and also the second one will be on the what we call the internal the internal structures, or you want to call it as major or minor, it's fine. It's the same thing like internal structures. Internal structure. Okay, we got two things. First is swing, second one is internal. So swing most likely is come from the higher time frame. For example, it's like H4, daily, or weekly. Okay, internal structures that come from H1 and below. Okay, H1 and below, which is M30, M15s, M5, and M1s. Okay, these are clear, right? So the swing structure actually is a large range where it's contained the price. Okay, so once the price is broken, it's called a break of structures. So for example, for the swing of structures, it should be something like this. Okay, okay, this is the swing structures. Whenever the price has been broken, it's called a break of structure. So this is an example of the uptrend. In this area, we call it as a break of structures. So it created from the low, high, higher low, and higher high. Okay, this is for the swing structures. You only can identify, you only can draw through these three time frames. Okay, which is H4, daily, and weekly. Okay, after the break of structures, the price will build up on a certain level. Price starts slowing down and doing as going back, which is the retracement on the higher low. Okay, retracement on the higher low and created new higher high to complete whole cycles of an uptrend. This is an sample of the uptrend. So for uptrend, you have to know, for the uptrend, you have to know is starting from a low point to the high, to the higher low, to the higher high. And this is from the uptrend, and this is for the what you call on the swing structures. Okay, so in the swing structures, we always got what we call the swing high and also the swing low. Okay, just drawing examples for you first. Okay, we talk about the swing structures first. This is examples of uptrend in the bullish structures. So what we can see right here, you got the high low. Let me write out. Starting from the low point, it's starting from the low point. Low and higher high. Okay, this is the what they call the swing structures. So in every structures after the breakout, after the breakout of the structures, which on the uptrend, it should be breakout of the previous high. Okay, should be the breakout of the previous high. This what we call as a break of structures here, BOS, break of structures. After the breakout of the previous high, it should validate. Okay, this higher low only validate. Only when it breakouts. Okay, only if this higher low break out the previous high, it form a new higher high. This higher low is a valid higher low. If it didn't break out this, what we call on the previous high, this will become on the weak low. Yeah, this will become on the weak low, which has possibilities for the reversal. I will talk later on the change of the trend, but okay, this is for the uptrend. This is for the uptrend. And right now we go to the downtrend, exactly just opposite lah. Okay, it's just opposite. Downtrend. Starting from the high point, and then you go to the low point. Low high. Lower low. Okay, so this is a downtrend. This is what you call on the swing structures here. In the downtrend or the uptrend, whenever you form the new lower high and new lower low, this will become on the swing high and also swing low. Okay, this is what we call on the swing high. And when it forms the swing low is after the breakout of the previous low. So this area must have the breakout structures happens, the BOS. Yeah, BOS. The breakout structures happens when the forming of the lower low, this will become on the swing low. Okay, this is for the uptrend and also downtrend, which is also the bullish and also the bearish structures here. This is for the swing structures. So for the internal structures, it's actually in the lower time frame, which is the H1 and below H1, M30, M15s, M5. Okay, on the real market, price will create a lot of internal structures inside the swing structures, and this is where the most people get lost because they are too much high and also low that cannot identify and cannot choose. So let me introduce you on how can you choose on the internal structures here. Internal structures actually inside, in case you don't know on the trend, okay, in case you don't know for a trend, you have to look from the swing structures first. If the swing structure show you on the downtrend, so you can just ignore all those beside the internal structures. They are uptrend, you can just ignore. Okay, you can just focus on the downtrend internal structures. Okay, you can just focus on the downtrend internal structures. And also you can just see all the structures that having the breakup. So for example, in here, okay, in this area, in the downtrend, right? Okay, in the downtrend, you have to focus on the uptrend that changed to the downtrend that got breakup. Okay, so you just mark on the lower high, lower low, lower low. Okay, on this area here, you can just focus for those structures. Okay, when we talk about structures, it's always angles. Okay, angle even not not on the this kind okay, is an angle. Whenever you form the angle, that is a structure. This is a high and this is the low. So you can only focus, okay, in the internal structures. You always focus on those structure that have breakouts. Okay, they have breakout structures happens. These are examples. Okay, for this is for the downside. Do you do recording afterwards? I'm outside right now. Can I review afterward? Yes. I have recorded this section. Okay, I have recorded this section. Okay, no worries. Okay, so for internal structures, are you guys clear? Always focus on the trend that are shown in the swing structures, okay, and also focus on the structures that have breakout. Okay, that have breakout. Okay, and this also I will be releasing the ebooks on next Monday. Okay, next week. I will take more examples, more sharing on the ebooks. Okay, so you guys, if you're not clear right now, you can ask or just wait for my ebook lah. Okay, and this is two for the structures. So now we are going on the change of the structures if you don't have any questions. Did you send the last recording? Yes, I have sent every recording inside the Zoom session, inside the Zoom lah, inside the Zoom Telegram channels. Okay, you can just click on the pin message. Okay, join on the Zoom meeting, learn and earn Telegram channels as what you can see right now. I have shared previous 4 sections. Okay. So later I will send the current one also lah. Okay, any question on the internet structures and also on the string structures? Okay, else I will just conclude for you guys lah. Okay, I will just conclude for you guys for what I thought about the structures. How many lower high do we have to see consider the downtrend or uptrend otherwise? Okay, for the downtrend you can see 2 lah, at least have 2 lah. Okay, because why we call it as a downtrend? Because the price keep moving down, keep moving down. That's why we call it as a downtrend. Okay, when the word keep moving down, that means it have to create one or more than one, more than one. Okay, more than one. So it means from the high point to the low. Okay, and then it failed to break the previous high. It created a new lower high, and then this one it created a new lower low. When you got these 4 structures, that is a downtrend. Okay, there is a downtrend lah. And for the uptrend, it's the same thing. It always have to keep moving up. Okay, that means it start from the low, it go up to the high, and it fail to break previous low. Fail to break previous low, it create a new higher low and go up, create a new higher high. Okay, and created a new higher high. This is what we call on the uptrend. So every trend, if you want to identify, you want to clarify either whether it's an uptrend or a downtrend, it must have these 4 structures. Okay, for the downtrend is a high, low, lower high, lower low. And for the uptrend will be the low, high, higher low, higher high. Clear? Are you clear? Are you clear about this? Are you clear about this, guys? Or any more questions? Okay, clear. Okay, clear, right? Okay, so I will just conclude. What is the main point for the structures here. Okay, what is the main point of the structures? Okay, first on the uptrend. First of the point is the structures must have the low, high, higher low, higher high. Okay, this is the first point. So second, it must break out previous high. Okay, it must break out previous high. This is the first thing. Okay, second, third thing is must fail to break previous low. Okay, this is for the uptrend lah. This is for the uptrend. And then for the downtrend, okay, directly opposite only lah. Okay, opposite only. First thing first, it must have the high to low, to lower high, to lower low. Okay. Second, it must break out previous low. Third one, it must fail to break out previous high. Okay, this is for uptrend and downtrend. You must be clear for this first in case later you cannot follow in. Okay, so uptrend and downtrend. Okay, and then for the swing and also internal structures, you first have to identify on the swing structures first. Okay, first thing first, you understand find out the swing structures. Okay, string structures only structures that manage to break out. Okay, only structures that manage to break out you can consider as a swing structures, which is swing high and also swing low lah. And then when you look for internal structures or the minor structures, okay, you always have to follow the swing directions. Okay, if in the bullish, you find the uptrend. If in the bearish, you find the downtrend. Again, this is for internal and swing structures main point. Okay, if you don't have any questions, then I will go on the change of the trend. Okay, the change of the trend, or we can call it as a change of the characters, change of the trend. Any more question you can ask right now, yeah? Okay, everyone clear, yeah? Everyone clear? Is everyone clear? Or any question else, you can just let me know right now. Okay, clear. Okay, everyone clear, then I will go to the change of the trend. Okay, first of all, change of the trends, actually you got the rules lah. Okay, for me, I have invented, okay, I have my own rules on the structures. Okay, on the bullish markets, the price makes higher high and higher lows. Okay, so for the high, for a low to be confirmed, it need to break on the higher high, else it will become a weak low. Okay, these are examples I show you just now lah. Okay, if it didn't break out on the previous high on the bullish, we are talking right now on the bullish. So you got the uptrend. If it didn't break out, yeah, let me mark it first. High, low, higher, high, low, higher, high. Okay, so if right now, yeah, this is a low only, yeah. If it didn't manage to break out, okay, if it didn't manage to break out on the previous higher high, this will become on a weak low. Okay, this will become on the weak low. Why? It's because of it didn't break out. There is no pause. Okay, didn't break out on the previous high. Okay, didn't break out of the previous high. So how if it happening on the change of the characters? Okay, change of the characters should be happening on the whenever it break out this low. Okay, whenever it break out on the weak low. Let me just erase something like this. Okay, if it happens, if it happen the new lower low, if it happen on the new lower low that break out this weak low, yeah, that break out this weak low, this doesn't consider as a change of character, yes. Okay, if you want to consider it as a change of characters, it must break out the confirm low. Okay, this is what we call weak low lah, and this is what we call on the confirm low. You have to break out on the confirm low. You've got the breakout on the confirm low, which is this area, this level. Okay, which is this level, this will become a change of characters. Okay, this will become the change of the characters. Yeah. It must always break out of the confirm low. Yeah. I'll show you in the clearer picture. Yeah. I'll show you in the clearer picture. So for example, right now you got the uptrend. Okay, and suddenly this start to do the lows, okay, the new lows, but it's not able to break out on the, okay, but it's not able to break out on the previous high, but it's doing the, once it's not able to break out on the previous high, once it's not able to break out on the previous high, and it started to do some comeback, become the structures already, this will become on the weak one, the weak low. Okay, show you this is the weak low. This is the weak low, and this is the confirm low lah. Confirm low. Okay, once it didn't able to break out on the previous high, this will become the weak low. This is a swing or internal swing. This is on swing. Internal also can use swing, and internal is all can apply this kind of the structures rule. I will call it as a structures rule, can apply it. Okay, but I will prefer to look for the swing. Look for the swing. Swing is stronger for me, stronger confirmations compared to the internal structures. Okay, so how can we identify on the change of the characters? How can we identify on the change of the characters? Change of characters. Or we can call it as a CHO. Okay, how can we identify and look after this? Wick or body? Wick. Okay, we will look at wick and not body only. I will look at wick. So how can you identify on the wick? On the change of the characters. First, you have to identify on the confirm low first. Ignore on the wick low. Okay, this is how usually the traders will just get trapped on here. Okay, we'll wait for the breakout of the wick confirm low first. Okay, we'll wait for the breakout of the confirm low. And then if it happens something like this, the change of characters is valid. Okay, the change of the characters is valid. CH. Okay, the change of the characters is valid once the confirm low has been breakouts. It means it become downtrend or what not. Actually, the change of character didn't change on the trend. Okay, it didn't 100% tell you on the trend has been changed. Okay, it's just on the first sign. It's just the first sign only. Okay, it's just the first sign only for the change might be possible to change. Okay, you get what I mean? It's actually on the first sign and also on the maybe some big players and all those BFI can use it to trap people. It has to be operate at the right place first. Also, later we will see on how can it be how can you know on how the trend is changed already when. Any time frame will this apply on which time frame is more realistic. Okay, for me, I'm using M5 and above M1 not using. But as you know, the higher the strongest. These all structures thing, the highest will be the stronger. Okay, this higher will be the stronger. Okay, so back to the topic, the change of characters did not confirm that the trend has changed. Okay, has changed totally. It just have a hint for you that the trend might be changing. Okay, the trend might be changing. The trend might be changing. If you want to confirm that the trend has been changed totally, it must created what? It must created a new lower high and lower low again. Okay, it must created a new lower high and lower low again in this area. Okay, after it break out the confirm low, it must created its lower low. Change to other colors. It's lower low already. It must created a lower high and lower low again. Again, make sure that it created this lower low has been breakout on the previous list also. Okay, to be better lah. Okay, but don't have also consider as a change of the trend already. But if it break out on the second structures, and this is what we call on the second structures. Okay, second structures. If we break out these second structures, the change of trend is more obvious and strongest. Okay, and stronger in terms of the structure lah. In terms of the structure way, the trend has been changed. Okay, so for you to trade on the change of the trend, you must wait on the lower low, lower high, and lower low again. Okay, and then you will look for the entries in the previous lower high. You will look for the entries at the previous lower high. The sell entry, okay, the sell entry in the previous lower high. Wait for the pullbacks, and looking for the confirmation that I thought last week. Okay, that I thought last week, you can sell. Okay, this is how we trade on the change of the characters and also change of the trend. Understand? Later I will share next week because my live has been banned, so I will only share the ebooks next week. Okay. What's the difference between COSH and MSS? MSS stands for what? Didn't heard before. MSS. What if the next candle break out weak low and confirm the low upwards? Do you still consider it a swing trend? No. If it didn't break out the confirm low, as long as the confirm low didn't be break out, the trend is still on the uptrend. It didn't change to downtrend. Market structure shift. Yeah, it's the same. It's the same. Same thing. Okay. So for the change on trend, are you guys clear about that? Any time frame will this apply? Which time frame is more realistic? M5, M15 above will be better lah. Lower time frame like M1, I'm not suggesting lah. Okay, any more questions? Any more questions? You guys can ask. Okay, else this is all for the structures lah. I hope that you guys more understanding on the structures. And maybe you can try on some examples. On this example, how that you draw to the cell zone. Okay, in terms of the structures, actually you can just identify on the area you should monitoring. So I give you another example here. We go to like maybe Euro USD. Okay, we go to Euro USD. Okay. Okay, I will just remove all this first. Okay, how can I doing on the cell zone? Okay, so for here you can see Euro USD H4. Okay, so where is the breakouts? This is the breakout. So after the breakout, it created a new higher high, right? Okay, this is the previous higher low. Okay, this is the previous higher low. And then another breakouts. This is a, let me use the ruler. It's better. Okay, so this is the higher low again. A new higher high. Okay, higher low. Higher high. Okay, so this is the confirm lah. This is the confirm. This is the confirm low. So after the breakout right here, the change of characters happen lah. The change of the characters happens. Okay, so after the change of characters happen, I will look after it's a lower high again. Okay, and then second structures right here. Okay, got the breakouts. Okay, got the breakouts again. So this is the new lower low. Okay, so how can I identify on the cell zone? Good questions. I will just identify on the area. Okay, most likely I will just identify on the area using somehow support resistance. This is my area to sell. Okay, this is my area to sell on this lower high. Okay, on the previous lower high area. Lower high area. Okay, after the breakout of the structures that come again, and then you were just looking for the sell in the lower high. Understand? Is that clear, guys? Is that clear? Any more questions? Okay, why sell? Why sell? Because of the break of the structures. Why you highlight the wick only? Okay, why I highlight the wick only? Because I'm using a resistance. Okay, in terms of resistance. When the resistance, you always take on the highest, yeah. On the highest only. Okay, highest wick. Why sell is because I show you again. Okay. Okay, we take this one can already. We take this one. This one. Okay, this is the previous lower high, right? So after the breakouts right here, this will be captured higher low, higher high, come back, higher low, higher high, higher low. Okay, and then another breakouts, higher high. Okay, so after this one, okay, after this one, the confirm low, okay, we apply on the what we learned just now. Okay, this is a confirm low being breakout, right? So this is the change of the characters. Understand? Is that not a cause on in EU? Yes, it's a cause. It's a change of the characters happens in EU. Okay, in EU. Okay, in H4 lah. In H4 lah. Okay, so this is a change of characters. So this is the new lower low again. So after the pullback, it created a new lower high and one more lower low. Okay, and this lower low has breakouts the previous higher low. Okay, which is on the second structure. Okay, which is on the second structure. So confirm already lah. Confirm already on the change of the trend has become the downtrend. So after this area, okay, after this has been confirmed to the downtrend, you will look at the area to sell. Okay, you will look at the area to sell. For me, I will always wait on the lower high area, and you can apply support resistance or supply and demands to look for your zone. Okay, to draw for your zone. For me, I'm just stick on the weak area, on the weak side. Okay, this is your sale. This is your sell area to be monitored. You consider a change of characters after structures broken with wick or body. Okay, had been broken on body. Okay, but you mark the level. Yes, you mark the level is on the wick. All right, you mark the level is weak, but it have to be broken with body. Okay, you mark the level with the wick, and it have to be broken with the body. How to sell if the sell zone is strong? How to sell if the sell zone is strong or weak? What do you mean? How to sell if the sell zone is strong or how to tell it's a sell zone is strong or weak? Okay, for this area, this will be continued on the second topic. Okay, the second topic will be talking about on the liquidities on the setups thing. Okay, for this area, we can just identify this as our sell zone. Okay, sell area. We will monitor on the sell area because it is on the place of the lower high. Okay, lower high. And if you want to entry on the sell, you have to have certain SOP for you to monitor on the price actions. Okay, if the area is strong, the price should be reacted something like this. Once it touch, okay, once it touch, okay, once it touch, it immediately reverse. This is a sign for you to know that your zone is pretty strong. Else you can just go to lower time frame. Okay, you can go to lower time frame. It's already showing some price action raise. Yeah, I've just explained you a bit. You can see when the price is doing a rally based rally right here. Okay, once the price has break out this one, you can identify this seller is very strong. Okay, this seller is very strong because we know that the rally based rally actually represent it represent on the buyers. Okay, represent the buyers. If your zone contain the seller that are stronger than the previous buyer, that means your zone is a strong sell zone. But can wait, can wait for sell at the price 1.1150, 1.1150, 1.1150. Yeah, this area. Yes, this area. You can wait to sell. You can wait to sell. Do you consider that sell area 2 or 3 touch? How can you properly count the touches? This one is the sell area actually not touched yet. Not touched yet. Because I mark this one, okay. I mark this one here. I tell you kind of the resistance and support. Okay. I mark this zone is because of this is a valid resistance. Okay, it's a valid resistance. And you think about how the valid resistance has been formed is because of the breakouts of the supports. Okay, the breakout of the supports. So when the price come in first time, this is not a valid resistance. But second time it come in, it break out the supports. Again, it break out the supports right here. So this become the valid resistance here. And then this resistance has not been retested yet. Okay, have not been retested yet. So this is how can I mark this zone. Okay. Happens already, you shouldn't be looking for the buy for reversal. Buy for reversal. Yeah. So far I saw is sell first. So far I saw is a sell first. Maybe in the lower place because I saw this area haven't been retested yet. This area. Probably it will come to here. Something left behind here. Okay, this area. High possible. I will not say 100%, but it should be something near this area haven't been collected yet. Okay, any more questions? Any more question you guys can ask right now? Okay, we take a short break. And that's all for the structures. Okay, that's all for the structure. What is the difference between change of characters and also break of structures? Okay. Okay, first, what is the difference between the change of characters and also break of structures? Okay, if there's uptrend, for example, right now, what you can see right now is EU is on what trend? EU is on pulling back. Okay, this is for the uptrend. Okay, uptrend, and right now, okay, it's pulled back for this for the buy lah. Okay, it's pulled back for the buy. Pull back for the buy right now. And if following the trend is crossing the breakout, again, if forming the breakouts, is called that break of structures. This one we call that break of structures. Okay, this one we call that as a break of structures. If something like this, okay, if something like this happens here, we call it a change of characters because it has changed from uptrend to the downtrend. How many touches does it take for a zone to be invalid? Maximum 3. Do you consider a fibs for the sell? Your fib here. Your fib. Let me try a fib. That is for the sell. Not really. The fib doesn't show. Can we put a buy on this type of structures? Put a buy can. Again, you can put a buy maybe on the breakouts. But for me right now, it's showing the breakout of the new lower low. So you better have to focus sell first. Later, can you do a live back test or explain your thoughts along the way? Yeah, I will show on the last on the directions. Okay, on the next week direction that you should focus on. But on what time frame? Right now, you can apply on any time frame. But you have to know on the swing structures and also internal structures first. If you cannot identify the swing structures, you cannot immediately jump to the internal structures because you will confuse on the what direction you should focus on. Okay, you should just identify on the swing structures. Any more questions? Else I will just continue on the second topic today for the I will go to the liquidities first. Okay, after the liquidities, we'll go through on the trading, what we call that, the SOP. Any more questions? Is everyone clear? Any confusing area? Any confusing? If all are clear, do comment clear. Do comment clear if you all are clear, guys. Okay, for the latecomer, Samuel, what are we learning right now? We are learning on the structures. You can refer to the recording later lah. Okay, you can refer to the recording later. Okay, next chapter. Yeah, I will go through the next chapter, which is about next chapter, which is about the liquidities. Yeah. Okay, which is about the liquidities. Okay, let me clear all this first. We go to the back one. Okay, right. Here we'll continue on the liquidities. Liquidities. Okay, first of all, I have you guys. Do you guys know what is liquidities? I will explain through a theory first. Okay, actually, liquidity refers to how easily an asset can be bought or sold. Okay, that means when the price is moving up or moving down, that's all the liquidities. Okay, the liquidity everywhere on the market, and you will feel the price to move up and down. Okay, feel to move the markets, correct? Correct. Without it, market can't move. It's just like car lah. It doesn't have fuel or electricity. You're not able to use it lah. Okay. So how can we spot on the liquidities? For me, the liquidity is simply the totalities of the orders that we have on market lah. Okay, it could be all those area or all those levels that the traders put their TP, their SL, their limit orders or their stop orders. Again, this generate a lot of big move, and because of most of the time price take the liquidities then go straight to the another way. Okay, this is why sometimes we call it as a trap, the liquidity trap or the liquidity strips. Okay, we have the common models. Okay, I got the models for you to spot the liquidities on the markets. But I will not talking. I only talking, I think, maybe 2 or 3 days. Other model, I will just, you can refer to the ebooks. The ebooks will be shared to you guys. Okay, I think next week, 9 or 10, either Wednesday or the Thursday. Okay, actually, the ebooks already done. Okay, already done. Okay, we'll be dividing the ebooks into 3. Okay, into 3 versions. Yeah. Part 1, part 2, and part 3. So they got the certain terms and conditions for you to claim on the ebooks. Okay, for the today class will be in part 1. Okay, for you to easier can do the revision. Okay, so we continue on the liquidities. Okay, as I say, the liquidity model. Yeah, the liquidity model. Okay, we got 3 lah. Okay, I will talk about 3 today. The first model, the most common one. Okay, is the equal, high, or low lah. Okay, or low model. Okay, the equal, high, and low model. And the second one I will talk about is today about the structure high. Yes, the structure high and low model. Okay, and the third one is the okay, the third one will be the trend line. Okay, the third one will be the trend line model. Okay, so in terms of liquidities, today I will teach you about 3 model, 3 type of model: equal high, equal low, structure high, structure low, and also trend line. The most common one, to be honest, is the equal high and equal low model. So are you guys ready? Are you guys ready on the first model? Okay, I will just write it out first. Equal high or equal low. Okay, equal high and equal low model. Are you guys ready? Comment again, ready, guys? Let me know you are still awake. Haven't sleep yet. Okay, let's go. Okay, so for the equal high model, for the equal high model, I will draw the examples here first. Okay, for examples right here, you got the equal high, which is too high at the same level. Yeah. Okay, which is too high at the same levels, and it come down. Okay, it come down, breakouts, keep breakouts, and suddenly you got the pullbacks already. Okay, it start the compression, pullback, retracement. When this area, yeah, you always have to identify you are not selling. You are not selling at the resistance, but you are selling at the supply zone. Okay, always have to know that. Okay, the supply zone. Okay, the supply zone will be the fake outs or the equal high liquidities to be sweeps. Okay, here you got the equal high. Still remember on the EU examples just now? Is similar, yeah, is similar. If you realize there is a supply zone above, okay, there is a supply zone above on the equal high, okay, because they This model, how can he identify this model? Is because of this area is usually on the retail trader like to trade on the double tops. On the double tops, this is their limits order. This probably will be their limits order around this level. Limits order, and their SL, and their SL will probably above on the double tops, maybe 10 to 20 pips above. This will be their loss level. This will be their stop loss level. So what is trigger on this double tops? Price high possible. I will not say 100%, but usually it will do something like this. It will come down first. It will come down a bit. Let all the retail traders be happy. They get a sharp entry at the resistance. They get a sharp entry at the resistance. After certain, it is testing certain breakouts, and we will move up. And it will move out to retrace the real supply and get down. This is the first equal high model. The equal high model. So you guys have to always identify on the equal high. You can trade on the equal high, but you have to identify whether you got the supply on the top of the equal high or not. If you got the supply above the equal high, you better not to entry at the equal high. This is the liquidity. This is the liquidity sweeps. First one is their limits order lah. First one is their limits order, sell limits, and also the second one is their limit order. I would say is a limit order. Put it as a middle. The limit order as the first liquidity. Second one, the liquidities will be their stop loss. Will be their stop loss. These two will be the liquidities in order to move on the move the markets. Just like someone said just now, it's a field to move the markets. It's a field to move the markets. So this is the first equal high and equal low models. Always identify the equal high first. Whether you want to entry, it depends on the is it got the supply on the top or not. If don't have, maybe you can try to sell like a retails. If you have the supply, you better wait on the supply first. You wait for the supply zone. I'm sure that everyone here know how can we identify the supply already, right? If you already watched last week videos and you attending that last week class. Is there got any questions? Is there got any questions? You got question or not clear? Got any questions? You don't have any questions, we go to the real market and see that equal high models. I will show you on the same. I will show you on the same Euro USD. Euro USD. Right here got the. Here got what? Here got the equal high, brothers. Here got the equal high. You can see here got the equal high here. Usually the price will make some sharp. It will make some orders first. Make some movement first. Once you retest to some level lah. I'm not sure any levels. It will go to collect on the supply, which is around this area. This area is the real place we are looking for sell if we are the smart money concept traders. This area is the real place that we are looking for the sell. This will be our equal high liquidities. And this will be our supply zone. Is that clear? So the supply considered as an order block. Yes, kind of. Equal high is 100 candles wick 10 pips away from the wick. Is 100 candle or wick 10 pips away. It didn't mention that, okay, it didn't not really can be calculated on 10 pips or what from the week. Okay, equal height, you not must it got the equal level, same level of height. Okay, it doesn't mean that it must have same exactly one line. Okay, like this one, almost similar can already almost similar. Okay, clear? Is that clear, guys? You don't have any questions, okay, we will be waiting on this setup next Monday. We are waiting for this setup to sell next Monday onwards. Okay, this is the first model. This is the first model that we are looking for in the liquidities. Okay, in terms of liquidities, this is the first model. Equal low, I think, do you need me to talk again on the equal low? It's almost similar, but just opposite only. Do you need me to explain again on the equal low, guys? If you need me to explain again, I will explain again. Just comment. Just comment. If you need me to explain again, I will talk again on the equal low. But the equal low is just opposite, not required. How about others? How about others? Okay, no need, right? Yeah, just flip you just, if you want, just flip on the iPad then you will be understanding. Okay, I already understood. Okay, understood. Then we go to the second one. Okay, the second one actually quite similar. We set sell limits. Yes, you can take sell limits. You can take sell limit, but with, if you want to trade on the what we call the liquidity set model setups, always the sell limit. I give you the examples. Okay, I give you the examples. If you are trading on this Euro USD, you can set sell limit, no problems. Okay, the SOP for you to trade on the liquidity setups, you can set the sell limits, no problems. But remember, to set your SL, maybe if you're entering right here, okay, your TP will be on the low okay, on the previous low here. Your SL not more than 20. Okay, not more than 20. So in case you are entering right here on the zone is until 400. So SL will be on 600. 600. Just like this. Okay, for me, usually I don't take the what we call the SL not more than 20 pips away from the zone. Okay, it depends on the zone. But this zone for me quite big, to be honest. So I better not to put the sell limit. Okay, better not to put the sell limit. We just have to wait for the price to come in, and then we can shift to the lower time frame and place entry. Okay, for the next week, for next week. Or for tomorrow, actually. Okay, so for the second setup, second model that I'd like to share with you guys is this what we call the structures, the structure high and also the structure low. Okay, the structure high and also on the structures low. Sell limit 3/4 of the zone. No need. The zone is around 60 pips. The zone is around 60 pips. So no need to set sell limit first. Because we cannot predict what will actually happen on next week markets also. Okay, so just wait for the price to come in. If got the price action in lower time frame, we can just sell. Okay, if you miss this trade, like it dropped right after it hitting around plus 10 pips from the level, that means we will be okay if you miss the trade, like it dropped right after hitting around test from the EQH level. You will not miss you will not miss always can get the second entry you can always get the second entry. Okay, just in case the price hit the supply zone, right? After it hit the supply zone, it immediately dropped like 30 to 40 pips. No need to worry, you can wait for the second entry. You can wait for the second entry one. No need to get the short like always okay. Sometimes you can just pending order to get those or the instant order when the price come in. Okay, only if the zone is smaller okay. Only when the price is smaller. Okay, if the zone is like 60, 40 pips, No need, okay, no need to like catch the sharp entry on the reversal. Immediate way to retest again, yes. Okay, I will explain again. I will explain again on the Euro USD. Same examples. Okay, because this zone, okay, just for information, is around 60, 53 pips, 53 pips of this zone. So if you want to take risk plus the 20 pips away, it's around 70 to 80 pips already. Okay, so if we miss out lah, okay, that means if the price immediately come down when it come down again, and then you just wait for the pullbacks again. You just wait for the pullback and sell lah, somewhere around the SBR or RBS. Okay, that's fine. That's what lower risk or you willing to take on the risk 70 pips? Depends depends on you If you're willing to take, you can try. But for me, I won't lah. 70 pips for a currency setup is way too much. Yeah, it's way too much for me. Okay, we're back to the second structures. Okay, second structures high and also structures low model. Okay, second one. The second model I would like to share with you guys. Okay, for the same thing, this on the structures actually also for the also a trap. Also a trap. Okay, usually it will come down first. Okay. It will come down first. Okay, and then it start to pull back. Okay, it start to pull back. Whenever the price touch the structures here, which is the lower high, here you go. Okay, here you go. People like to sell in the lower high. Also will kena lah. Okay, also will get trapped. Okay, maybe sometimes they will just move like 10 to 20 pips also. But remember, above the lower high, okay, above the lower high, they got the mystery gift. Okay, you got a mystery gift on the top, which is a supply. Okay, which is a supply zone above. Similar logics. Why not drop the time frame and refine a supply zone? Why not drop the time frame to refine the supply zone? You can refine also, but sometimes it actually not really sufficient for me. Because on the H4, if you refine, I show you again. We complete this explanation on Euro USD first, and then we go on second one. Okay, Euro USD. Okay, you can refine to the lower time frame. Okay, you can go to here. What should you take? What should you take on the, if you want to really refine on this, I will take on the top lah. Okay, I will take on the top. Is that sufficient for you? For me, not realistic lah. If you're taken from the H4, okay, then you go to H1, you just refine on the top. But if it come, then okay lah. But if it don't come, I think mostly it didn't come lah. Yeah, it didn't come lah, mostly because this is a huge imbalance lah. Usually on the supply zone, if it's too big, it's caused by the huge imbalance. Okay, imbalance usually it will come through this area. Usually for my experience, usually you come through this level, and I prefer not to precise on the zone. Again, not to precise on the zone, but we wait on the price actions. Okay, we wait for the price action. Usually I will wait on M30 or M15. Okay, if you come to here, you got the breakouts, pullbacks, entry lah. Okay, you got the breakouts, and then you can entry. Okay, this is how I trade lah. Can we call the left side as an impulse on the H1 of big candles? Yes. This is very impulsive lah. Okay, this is very impulsive lah. This area usually caused by the news lah. Usually caused by the news. Like the current one on the bullish, also the same lah. This area also causing by the news. Okay, this is what called the imbalance. Okay, the imbalance. Okay, any more questions on Euro USD? Any more questions on Euro USD, guys? Any more? If you don't have, then we continue on the structures already. Where is it already? Right, finish already. Any more questions? Okay, if you don't have question, then we go to the second model. I repeat again. The second liquidities models is the structures high or low model. Okay, structures high or low model. Okay, so usually this is same thing like the previous one, the equal high and equal low, but this trap happens on the structures high or low, which is the swing high and also the swing low lah. Usually it will happens on the swing high or the swing low. Okay, this is the swing high. Yeah? This is swing high. Swing high. Okay, this is a swing high. Usually it will happens when the retail trader like to trade those resistance, support. They like to sell on there. They didn't realize there's actually the big boss. The big boss is somewhere around above on the structures, the supply. Okay. Okay. They didn't realize because they have the limits order here and also the stop loss here. So this one is the second model of the liquidity traps. Okay, the liquidity trap. You always have to identify lah. First thing first, you have to identify whether you got the swing high or swing low or not. And the second thing you have to identify, you want to trade on the swing high or above, on the top of that got the supply zone. Okay, if got the supply zone, you better to take on the supply zone, not to take on the swing high and swing low. Okay, understand? Swing highs consider higher time frame swing structures. Yes, yes, swing structures, but not the internal one. Okay, swing structures. Any questions? Same logics, okay, but different application. Always that the previous one is looking for the equal high and equal low, and this one will be looking at the swing high and swing low. That's why I'll be talking the structures first before we come to liquidities. Any questions? Any questions or all clear? Because it's quite similar to the previous one. And only the last one, the trend line will be slightly different. Will be slightly different. Any questions? If you are all fine, comment clear, and I will move to the trend line liquidities models. Okay, the trend line liquidities model. Clear? Okay. If all are clear, then we go to the last one. Okay, the last model that I will share today. Okay, either maybe next time class or you just refer to my ebooks. You can just refer to my ebooks. Okay, on the trend line. Okay, trend line, I hope that everyone know that the trend line. Okay, if market structure is uptrend, this sell at the supply still works. If the market structures is still uptrend, uptrend you weren't looking for sell. If the market structures, okay, so for example, the structures must be downtrend, you're looking for sell. And then the minor one, the internal one, okay, it's pulling back. Okay, it's pulling back, the internal one. Okay, the internal one is pulling back. And then you will sell at the supply. You will sell at the supply. So if for the market structure is still uptrend, okay, the market structure is still uptrend, you'll be looking at different one. Okay, you'll be looking at maybe on the uptrend. And then when you pull back, you will buy at the demands. Okay, you will buy at the demand. It's below on the higher low. Okay, it's below on the higher low. Andy, did I answer your questions. Yes, okay. So we go to the last one, the trend line. The trend line liquidities. So first one, I have to let you know what is trend line first. Okay, I will let you know what is trend line first. So if a downtrend, keep continue. The downtrend, up, down, ish. Something like this. So you can draw the trend line from the top to the top lah. Okay, just link through all the high, and this is your trend line. Okay, this one we call the trend line resistance, the resistant trend line. Okay, resistant trend line. Where is the ebooks? The ebooks, I'll be share next, I think this coming Wednesday. But I have separated it into 3 versions: part 1, part 2, and part 3. Because I know that if I share this one for free, confirm a lot of those, I don't know, okay, confirm a lot of the Shopee sellers will be take it to sell and to make money maybe. So I just separate it to the 3 part lah. So in case for you guys to get the full version, you have to take some terms and condition lah, but not paying lah, okay, just go through some terms and condition, then you can get already. Is more secure for me. Okay, we back to the trend line. This is the resistance trend line, and for the support trend line, exactly the same lah. Okay, the support trend line exactly the same only. You have to look for the uptrend first. Okay, after the uptrend, you can take a trend line to draw from the low to the low. Okay, and this is a support trend line. Trend line must be drawn on the shadow or the body better. For me, mix. For me, mix. As long as the trend line is not backlog, okay. As long as the trend line is not backlog, as long as it touches either the wick or the body, for me it's fine. That's not really important for the body or the shadow, right? Okay. If you cannot see very clear, you just take it from the body lah. If you are experienced, you can see those through the shadows. You can take it from the shadows. Doesn't matter. Okay, this is the trend line. So for the trend line liquidities models, the trend line liquidity. Okay, the trend line liquidity model will be something like this. Where's the one? Here. When it's a downtrend, it will be something similar to this. Okay, similarly, when you're using the trend line, right, it must have at least 3 touch. Okay, 2 touch for you to extend. Okay, 2 touch for you to extend. And be careful to those more than already 3 touch here. Already 3 touch. Okay, already 3 touch trend line. You have to be very be careful be careful on those. Okay, always have a supply. Okay, they are waiting you above on the trend line. Okay, they are waiting you above on the trend line. After the 3 tests, okay, after the 3 tests. Can we draw a trend line on H4 time frame? Any time frame, any time frame also can. Any time frame also can. But just have to be careful on the 3 touch. Okay, because trend line logic, yes. Trend line logic will be on your something like this. Yes. Okay, after the 2 touch, Okay, you will wait for it to pull back and you buy here, right? This is trend line logic. So if the trend line already 1 touch, 2 touch, and 3 touch, okay, if you're waiting for the 4 touch here, if you're waiting for 4 touch, you better be careful because there is a supply. There is a supply zone waiting for you. Yeah? There is a supply zone waiting to trap you. Okay, you will always sell this area, right? And your stop loss will be on this area. Same lah. You got the limit orders and also your stop loss as the liquidities. Okay, you got the limit orders and also the stop loss as your liquidities. So this is a trap lah. So for first thing, you have to aware lah from the third touch trend line. And also you have to aware, is there any supply on the tops of the trend line? So for all these liquidities models actually are emphasizing on one main point only, which always sell on the supply. Okay, always sell on the supply. Don't want to sell at the equal high. Don't want to sell at the lower high. Don't want to sell on the trend lines resisted. Okay, always look for the supply on the top of this thing, above all these things. Okay, understand? So these are the 3 models that I will be showing you guys on today. There are more models. There are 2 more. There are 2 more models that will be put inside my ebooks. Okay. So any questions on the liquidities? Any questions on the liquidities? If you don't have any liquidities, I will take you guys on the last topic because the time quite late already right now. Okay, I will take you guys on the last topic, which is my personal trading SOP. My personal trading SOP. What is liquidity sweeps? Okay, liquidity sweeps usually sweeps the retails. Okay, it sweeps the retails. For example, like this. For example, like this one. Okay, on the 4th touch, right? For the 4th touch, you will always want to sell here. Then you think after you sell, wow, it dropped. Then you think you will get a sharp entry. But after a while, it reverse to get the supply. When you get the supply, it's already hit your stop loss. This is what we call the liquidity sweep. Able to show examples on the charts. Examples on the chart. Can be showing on the latest one. I remember on the gold . Okay, this one. Okay, remove offers. Okay, this is the last week. Okay, this is building the liquidities. Okay, this is building the liquidities. We know that H1 enough. Okay, in this area, what liquidities that we got? Another liquidity model are sections and chart patterns. One is the compress. Okay, another liquidities model. One is the compress, and one is the sell side and also buy side liquidities. That one I will cover in the ebooks and also on the next sections. Liquidities, the advanced liquidities. I will call it as the advanced liquidities with the sell side and also the buy side liquidities. What type of liquidity sweep is the strongest? Equal high, swing high, trend lines. The most common one, I would say the most common one usually happens is on the equal high. The equal high, equal low usually happen. Okay, for me, it's too often already, that one. Okay, so I'm explaining the equal high or equal low examples on the gold last week. Okay, you know what is the reason the gold spike until around 1926? Okay, if you swipe until the left, you can swipe until the left, you will say what is here. H4 is more clear. H4 is clearer. Okay, you can see this area actually got the demand zone. Okay, this area actually got the demand zone from 20 something, 26.6 until this area. Okay, 25 until 26.6, the demand zone, right? And before it touched to the demand zone, what has it do? Okay, you can see on the H1. what let's do is do a equal low. Okay, you can see this one is an equal low, right? Multiple equal low. I would say this one is a multiple equal low. EQL. Okay, multiple equal low before it tested on the demand zones. So in this case, if this loan is very small, you want to do a limit, that's fine. Okay, if the zone is pretty small, like 20 pips and below, you can go for it. Okay, you can go for it. And the sell, you still remember the sell we are triggering last Friday. We are selling from here, right? We are selling from the supply, guys. Okay, we are selling for the supply. And the reason we are selling on the supply, same, is doing the equal high here. Okay, is doing the equal high. Equal high here. Okay, that's why we can sell. Okay, that's why we can sell. You see the zone around 25 pips only. So it's fine. It's still fine for you to like setting the sell limits or buy limit. If the price, if the zone is smaller, but if the zone is like 60, 70 pips, cannot lah. That one over already. Okay, so this example is for me is pretty good for you to illustrating this this one lah, the equal high and equal low examples. So any more questions on the liquidities? As I will go to the last chapter. Okay, last chapter I will not explain too deep, but I think most of you guys know lah. Most of you guys know on how can we doing on the trading SOP. Okay, is that clear? Okay, one more time. If you guys are clear, let me know. Okay, comment clear again, guys. Comment clear again. Comment. Everyone are clear about liquidities that I shared tonight, right? Okay, will you touch on FIBO entry and TP today? Okay, FIBO entry and TP, maybe we can put it as a last topic lah. Last topics. Okay. Before the FIBO and Fibonacci's, I will talk at the last one, which is the trading SOP. Okay, the trading SOP. Let me go to the trading SOP level first. Before that, any questions? Do you got any questions? Any question can ask right now, yeah? Okay, else I will just deleting this. Okay, delete all this. Okay, the last one will be the trade. I will call it as a trade management or just the trading SOP. The trading SOP. Okay, SOP. The time frame. I'll play around the time frame to let you know how can I identify on the trade or the setup. Okay, first time frame that we use is the daily time frame. Okay, a trading SOP for me is just multi time frame. Okay, multi time frame. Okay, multi time frame. Okay, so the time frame that I'll be using at first is the daily lah. Okay, for intraday or more to the scalping traders. Okay, I mean intraday and more to scalping one. I will just started with the daily one. Okay, the daily first time frame. Okay, first time frame I will go through on the daily first. The daily time frames. Okay, once a week I will check on the overall bias of the market and mark the support and resistance. Okay, I will mark the support, resistance, and also the supply and demand zone. Okay, because for me, daily, the level is quite key for me. If it touches that zone, it should be got some reaction in lower time frame. Okay, I will show you how can I mark on the daily bias. Okay, I'll show you on the goal. Okay, let's this one first. Okay, first one we'll go to daily. Okay, so for daily right now, what we can see, what we can see right now, actually the daily is still on the retracement of the previous uptrend, right? Okay, the previous uptrend here. This is the first one. This is what we call the demand zone. I will mark all the key levels for me to just monitor first. Okay, this is the demand zone. Okay, the previous breakouts. Okay, the previous breakout here show it is still uptrend. Right? It is still uptrend. It's still uptrend. And this is the confirmed low, haven't been breakout. Okay, the confirmed low here haven't been breakouts. Okay, this is a confirmed low. Okay, confirmed low here haven't been breakouts, and it's already showing some good price actions, which is the breakouts here. Okay, which is the breakouts. So I will be more focusing on buy. So which level can I focus on buy? I will just mark on the S and R level that I should focusing. Okay, which is around here. Okay, the breakouts. The breakouts can see. I'm not sure you guys see or not, but I can change to line chart to let you guys see. Okay, the resistance being breakouts. Okay, the resistance being breakouts right here. You can just mark a line, or you can just mark here also can. This one, these two I will be marked up. Okay, these two. These two level I will mark in the daily so that I know right now I should focus on buy or sell. I should focus on buy because already touches on my point of interest. Okay, this is all I call it as a point of interest. Okay, so daily for you to identify on the trend, the directions, and also mark all the point of interest for you to monitor purposes. Okay, monitor only for you to monitor which is around 1924.8 until 1925. Is that clear for the first time frame? Okay, for the first time frame. Clear or not? Daily, what should you do on the daily? Identify the direction and also identifying on the point of interest. I will use the line to mark only. Can you use as a plan B for sell? Plan B, you can, if the point of interest, if your point of interest has been breakout, you can use it for sell. But first you have to know that the confirmed low has been breakout first. Have to be breakout first. Evan, it looked like a downtrend. How do you identify the buy? Okay, how can I identify a buy? First of all, this daily. This daily show that, okay, this is the breakouts. Okay, this is the breakouts. So it's already a higher high, right? Okay, and the demand zone, this is the demand of the daily. It's showing a good reactions. Okay, it's showing a good reaction that it formed another breakouts, right? This for me, it's a change of characters. Okay, it's a change of characters already. Okay, and then you can just identify on the key levels. Okay, on the key levels that you want to monitor on the buy entry, because the big time frame, the big direction right now is on the uptrend. Okay, how do I identify breakout before you go into the line chart to confirm? I identify breakout. Okay, the breakout you same you based on the structures also Okay, maybe I have to zoom out, zoom in a bit to let you know on the structures breakouts. Okay, So here is the lower high, right? Lower high. Okay, lower low. So if you break out this level, yeah, if you break out this lower high level, which is the confirmed high, this is the new higher high. And this will become on the higher low, this level. Okay, this will become on the new higher low. So for me, I will just wait for the uptrend buy lah, because the overall trend right now on daily is on uptrend. That POI also looks like a strap zone. Yes, for me, look like a strap zone, or it can be look like a rally-based rally, which is a demand zone. Okay, this is for the daily. This is for daily. Okay, got it. Okay, then on the second time frames. Okay, the second time frame that I'm going to view, you can choose lah. Okay, you can choose lah, either on the H4 or H1. H4 and H1. Okay, H4. Look at a double top. Double top. Where got the double top? Or you mean this one, is it? You mean like this area? You got a double top, correct? This actually not really on a double top lah. I don't like this kind of double top lah. This one is just a reaction to the previous high. Because as you know, the structures, the market structures always move like, when it goes up, okay, when it break out, it must come down, right? So what make it come down on the retracement is the previous, maybe on the previous high, this level. Previous high, make it as a retracement, come here and break out. Okay, so this is the only the reaction on the previous high lah. Okay, so second topics, okay, second time frame that you'll be using is H4 and H1. Okay, H4 and H1 here. So I identify on the POI already. So I go to H4. Okay, I go to H4. Right now what is happening? Bullish engulfings, or what we call it as a break of structures lah. Maybe in H1. In H1, you can see on the change of characters should be actually happening. Should be happen. But it has a bullish engulfing lah. Okay, but there is a bullish engulfings happen in my daily point of interest. Okay, so for H4, it's just for you to look for the price actions. First, okay, daily you got the POI already, and then you for H4 you look for the price actions. Price actions. Okay, so right now what we can see, it got the bullish engulfing, right? So this is the bullish engulfing actually indicates what? Actually indicates a strong bias inside your point of interest. Okay, actually indicates a strong bias inside your point of interest. This fulfilled on the second requirement of your trading SOP. Okay, H4 complete, and then you can go to the third one. You can go to the third one, which is M30 on M5, M30 or M15. Okay, third time frame will be on M30/M15. Okay, /M15 you can go. Okay, you can just mark this area first. Okay, I will mark here lah. I will mark here. This area. Okay, you can go to M30. Okay, you can either go M30 or M5 lah. Okay, so for M30, you will be looking for another time of reaction again to the zone. Okay, you can monitor on the either another breakouts. Okay, another breakout that is forming new structures. Okay, they are forming new structures and then pullbacks you can buy. These are the first possibilities. Or it coming back. Okay, or it coming back here maybe. Okay, got the new structures. pullbacks, and then buy. This is the second one. Okay, understand? So M30 actually looking for the double confirmations. Double confirmation, which is the second time confirmation for M30. They act as a trade controller. Okay, act as a trade controller. Which usually you have to find on the what we call on the more to the price actions, really the candlesticks, how we move. Very clear on the M30 or M15s. Okay, understand? So we always waiting for the second confirmation first before we entry. Okay, in terms of after this 3 time frame application, you should be able to place entry. You should be able to place entry after these 3 confirmations. Your entry will be below of the zone. Okay, and your TP will be at the highest on the previous structures. Okay, this is your TP and this is your SL. Understand or any confusing? You got any confusion? This is how the trading SOP works. Daily, we want you to look for the direction and also your point of interest to monitor. And also H4 for you to first confirmation, M30, M15 for you to second confirmation. So after these 3 combined, complete these 3 requirements, your entry will be very low risk. Okay, your entry will be very low risk. Understand? If you understand, comment, understand or comment clear right now. Or any confused, just let me know. Clear? Is that clear on the trading SOP that I shared, guys? You try to apply on this. Okay, you try to apply on this first, and then we can go to another back test. Okay, you can go to another back test on this. Clear, right? We need to practice. Yes, need to practice. Okay, so for the last part, someone requesting on the Fibonacci retracement. Okay, someone requesting on the Fibonacci retracement. Okay, to be honest, I seldom use this Fibonacci retracement. Okay, if I really want to use it, I will always go to apply, only apply for the what we call the structures. Doesn't clear like a spike. Like a spike. Okay, like those very high volume movement. Okay, for example, this one. Okay, I will always apply on kind of this one only. Very high momentums that we cannot see. Where got the zone? The zone, where is it? So I will take from the highest, which is swing high. Okay, the swing high to the swing low. Okay, the swing high and the swing low. Okay, maybe I can take until here. Okay, the swing high and the swing low. News play a big role to check liquidity graph. Yes, always happen on liquidity graph is the news time. Question is, news make chart or chart make news? Why not both? Sometimes chart make news, sometimes news make chart. Okay, so back to the topics of Fibonacci's. The Fibonacci's are always applied when it cannot very clear on the structures and also on the zoning. You can use that. This is the setting. Okay, this I think it's a default setting. The default setting only selected few level that I think is relevant. 382, 618, 0.5 is all the Fibonacci retracement level that I take it. Okay, if you guys want it, just screenshot or just apply to your Fibonacci's. Okay, so this level, after you take from the swing high, okay, after you take from the swing high to the swing low, where's the swing high? Okay, swing high to the swing low. Okay, swing low is here. Swing low. Okay. Right. This is a swing high. And now you're looking for sell, right? Looking for sell, swing high, and this is your swing low. Okay, then only take these three level lah. Okay, this three level is a high possibility retracement level that that all the price usually retrace these three level only lah. If you're higher than these three level, most likely the retracement invalid. Okay, the retracement will be invalid already lah. So you can just mark on this one, these three level lah. As what? As a high risk, low risk, and medium risk. Okay, the high risk will be, this is on the low risk, medium risk, and high risk. So these three level you can just identify lah, whether which one you want to take. Okay, but for me, not usually I will use this kind of like pending order instant inside. I will wait for the price action. So for example, usually it come to the first level, right? Usually the price if you respect on the Fibonacci, it come to here, rejects first time, and then when it come to second time, it will touch on the second line. It will touch on the second line, which is the medium risk level. When it comes to break out this high risk level, I will entry when it pullbacks. This is your entry. Okay, so I treat every level as that support and resistance. Okay, I treat every levels as a support and resistance. It got a breakout of the high risk level, then pullbacks, I sell. Which percent is the golden zone? The golden zone for me is actually they say that the golden zone is like 0.5 to 0.618 lah. But through my experience, most likely these three levels, you can just watch the retracement is okay. If you want the low risk to medium risk, you can take 0.382 to 0.5. Like this Fibonacci is actually not hard, but for me, sometimes tune, sometimes not tune. Sometimes correct, sometimes incorrect. So it's still depending on the market structures. Still depending on the market structures. Also the same thing, everything the structures come first. Okay, swing high, swing low also can be determined first before you take Fibonacci's. Okay, the confirmation for you to entry in Fibonacci's, actually you treat every level as an SNR. Okay, SNR level. If the price come in, rejects, then pullbacks, you can try the entry. Okay, rejects, pullback. If got the breakout, you can try the entry. If it come again, second time, it break out the first level, pullbacks, you can try the entry. You have to trade every level. You have to trade every level of the Fibonacci is the SNR. Where is your TP? My TP will be on 1 always. Again, your TP will be on 1 and your SL is another level above. Do you take entries of Fibonacci, or you do have 5 supply and demand zone within the golden zone before taking an entry? I will not find the supply and demand zone if I use these Fibonacci's. I will just monitor inside. If got the breakouts of certain level, I can entry. I will not find the supply and demands. If I manage to find the supply and demand, I will not use Fibonacci's. Only when I didn't manage to find any supply and demand, I will go to Fibonacci's as my last choice. Okay, so any more questions for today's lesson? It's time to feedback, guys. It's time to feedback. Let me take some videos on this. Okay. Take some music first. Any music? Okay, any feedbacks on this? Any feedbacks on today's lessons, guys? Please comment. Okay, they can hear me. Is it can hear me right now? Can hear me right now, guys? Okay, so that's all lah for tonight. If you got any question, actually you can just PM me or just state in the groups. Yeah? You can just state in the groups and just stay tuned. Stay tuned for tomorrow mappings and daily outlook for the goal, and also the new release for our ebooks. Okay, our smart money concept ebooks to be releasing on this week. Stay tuned and bye, guys. Good night, follow. Bye bye.